Argonaut Gold is an intermediate producer here in the Americas. We're actually looking at a picture of our camp that is going in Dubreuilville, Ontario, our next mine, or Canada's next gold mine, actually, to be built. We'll walk you through today through the presentation. We'll spend about 30 minutes, and then we'll have some an opportunity to do some Q&A afterwards. So once again, thank you all for joining. Today I'll be making various forward-looking statements. These will, while we can't predict the future with 100% accuracy, these statements are based upon the information we have available today and our best information as we move forward into the future. So once again, we'll be making forward-looking statements. When I think about Argonaut Gold and who we are and what we do, I believe Argonaut is the full cycle business. I've been in this mining business for over 30 years, and I believe Argonaut checks all the boxes that you as an investor may be looking for. We provide the sizzle of exploration through Magino and La Colorada, which we'll talk about today from an exploration front. And then on the development front, we provide the exciting change that comes from a new mine being built as Magino is under construction and to become the next gold mine for Canada. And underpinning all of that is a solid, sure foundation of operations, which last year provided nearly $100 million worth of cash flow in order to fund and de-risk that future. So Argonaut checks all the right boxes. It's a one-stop type of shopping approach for an investor, and it does it by reducing the risk associated with this business. So let's move into Argonaut, where we are and what we have been doing. Argonaut is a North American producer. We have 4 operations, 1 here in Nevada and 3 down in Mexico, from which we'll produce between 200 and 250,000 ounces this year and generate nearly $100 million worth of cash. Now we have 2 exciting and development projects that we'll speak a bit about today. Our Magino project, which is Canada's next gold mine being constructed today, and then our Cerro de Gallo project down in Guanajuato, Mexico, which hosts nearly 4.5 million ounces and is in permitting. Now our history has been, we have been in this program for roughly 10 years as Argonaut. We have produced nearly 1.5 million ounces and done so at a very respectable cost. Our balance sheet is clean and very strong with nearly $230 million worth of cash, a convertible for $53 million at a 4.5% kind of rate, and an untapped revolving credit facility for $125 million. So clearly a non-stretched balance sheet and lots of room for the company as we grow our base. Now, when we think about the last 3 years for Argonaut, what I'd like to point to your attention is that we've seen a rising production profile, a relatively flat cost profile, which yields a rising cash flow profile. That's what you want to see in a company. You want to see a history over the last 3 years of relatively rising cash flow, costs being maintained while inflation and other things start to rise around us, and that cash flow being driven even higher, which can yield greater opportunities to the future. And we're doing that in spades right now. So when we think about the future of the company and the vision of where we're going as a company, we are transitioning right now as a company from a relatively high cost producer in this 150 to 200,000 ounce range with relatively short mine lives to a lower cost intermediate producer of 300,000 to 500,000 ounces a year with longer mine lives. We're talking 15+ year mine lives. And that's really where you want to be. That creates the foundation for a sustainable growth pattern and a replacement over the future. Now, underpinning this strategy is a 3-phased approach of harvest, replace, and growth. Now, clearly, when we look at these areas, harvest for us means garnering as much cash out of the existing operations, running them as efficiently and effectively as we can. On the replacement front, it's about a business where we're depleting daily and finding a way in turn to add back to that reserve and resource base. And on the growth front, it's taking your development pipeline and moving that into production. Because in this business today, for producing assets, we get paid about 0.7 times their future cash flow value. But on a growth or a development type asset, we're being paid about 0.2 to 0.3 times that. If we can simply unlock that growth asset, well, we all win. And that's what we're striving to do here at Argonaut. So when we turn to the next slide, this is a scorecard from what happened during 2020. It was a foundational year for the company and one that was impressive. On the harvest front, nearly $100 million worth of cash flow was generated from the assets. We managed through some rather challenging times here with COVID, etc. Had higher production and lower operating costs. That really speaks to the health of the company. On the replacement front, whilst all of this COVID and everything else was going on, we were fortunate enough to complete an acquisition of the Florida Canyon mine. And we grew our production base, and our reserve and resource replacement was off the charts. We're talking in the 40s and 26% growth rates. That's unheard of in this business. And then we moved to the growth front. Not only did we get a project permitted in Magino, we also completed all the social licensing that we needed to with our First Nation partners, come up with a proposed financing plan, and green-lighted this project. That is a tremendous outcome for us as a company and puts us on the path towards creating Canada's next gold mine. So as we turn to the next slide, let's look individually at each one of these phases. On the harvest cash phase, our assets that we're running in Mexico are the El Castillo, San Agustin, and La Colorada projects. Individually, not extensive mine lives. We're looking anywhere from 2022 through 2026 as far as mine lives today. We have been drilling and have an opportunity to extend a little bit that life. But what's important is that these assets continue day in, day out, even though they aren't the highest grade, to produce and generate real cash flow for the company. We recently added in, as I said last year, the Florida Canyon project. It now represents our longest life asset in production with 2031 plus as its life to date. And we are drilling to expand there and see what we can do. Our 2021 guidance is between 200 and 250,000 ounces of gold to be produced, and to do so at an all-in cost of about $1,250 to $1,350. Now, when we step back and look at the first quarter of this year, we're starting things off on the right path. The first quarter, we produced nearly 60,000 ounces of gold, about 300 ounces short of that. So 59,700 ounces. So almost 60,000 ounces in the first quarter. We did so while generating $28 million in cash flow from those operations. Now, if you remember back to what I said at the beginning, we thought we could do 200 to 250,000 ounces, and that would generate in a $1,700, $1,800 environment, somewhere around $100 million. So we're well on our way with 60,000 ounces of production in the first quarter and $28 million worth of cash flow coming from these operations. So let's move on to the replacement phase. As I said, last year was a fantastic year. We had tremendous growth, 43% in our reserve base and 26% in our resource base. Now, what is important about that is not the percentage change, but the base that you're working from. We have nearly 7 million ounces in reserves that we're working from as a company and 13 million ounces in resource. That provides a substantial foundation to build a company from and provides a longer future as we look out into the next 5+ years. So what is happening intentionally to drive those kind of changes? In our phase 2 of replacement, we're drilling at our projects. As I said, we are drilling at our Magino and our La Colorada project, and also our Florida Canyon project. I'm going to focus a bit here on our La Colorada project because we just released some drilling information that occurred here in the first quarter of the year, and we just released this over the last month. Now, what we're looking at is what we call the El Crestone pit. This is where we're actively mining today and where we'll get our production and cash flow from this particular project this year. You can see the drill holes, and now you can see the A and the C sections. Those are kind of like slices of bread that we're going to look at next. So when we move to the next slide, here's what we see. This is at depth, and we're trying to get a picture of what might be happening or might not be happening at this particular project. These are the A slice and then the C slice that we saw on the prior page. Now, what I can tell you about the La Colorada project is this. We have always known that this project hosts mineralization at depth. We just didn't know what that mineralization might be. After all, we knew that in the late 1800s and early 1900s that this particular project was mined as an underground mine. Then, from the early 1900s, when the Mexican Revolution occurred, until the 1990s, this project sat dormant. And then in comes a guy by the name of Chester Miller, who launched a company called El Dorado Gold. This was his foundational asset. He was mining around the old underground workings, and today we're still doing that. I'm going to draw just for a quick second for you where we are in this pit, because this is an actual open pit where we are actively mining today. So if you follow this little line that I'm drawing in black, this is where we're currently mining today. If you'll also notice on this slide, you can see a light, faint blue line. That represents what we think the ultimate overall pit will look like in a $1,350 type of environment. I'll kind of draw that out for you right now. And then you'll notice on these slides, you'll notice a red line. Now that red line, it represents what might potentially happen if we move the gold price from $1,350 to $1,600. And all of a sudden, this is what we would gain. So significantly more reserve. Now, if you'll notice from these slides, you'll see additional mineralization below that. And that's where we are today. And I'm quite excited about talking to you about this, because today the open pit mine that we are running today is about 0.6 grams per ton of gold. Now, beneath that open pit and what we've drilled to date, we just have 11 drill holes into new mineralization beneath. And what we're finding is tremendous width and grades. Now, in Mexico, when we think about underground mining, we think about 2.2 grams is the cutoff or the break even. Now you can clearly see from 45 grams and 99 grams of material that we're tremendously well above that. And these are substantial in nature, 12 meters and 21 meters. Now the key here for us with this being an active project, last year this project generated $25 million worth of cash to the balance sheet. This year it's supposed to do substantially more. So we need to continue to mine. So we'll do a bit of a dance program here between the active mining and the drilling program, where we continue to go in, we'll drill, and then we'll mine and remove the drills, and then we'll come back in and drill again as we continue to explore below the pit depth here. This could be a whole new phase for this particular project. 2 more years of open pit mining and then underground mining to occur here, while we're starting to mine in yet a third pit that we've identified and started to open up here at the La Colorada project. So exciting times, some of the best grades that we've seen in this business over the last, I would say, 3 to 4 years at substantial widths. And we're really excited to get in and see what this year's drilling will bring to us. But clearly that reserve life today of running through 2025 looks to be having the potential to grow and extend even longer. So let's move forward onto our growth phase. The growth phase for this company is all about unlocking our development pipeline. As I said earlier, in this gold business, a development project is valued somewhere between 0.2 and 0.3 times its ultimate cash flows. That for us represents significant value to be unlocked. When we think about the future cash flows of these projects, these two projects, the Magino project and the Cerro de Gallo project, we're talking about over $1 billion to be unlocked in a $1,700 gold environment. So let's talk about what the compare and contrast looks like for these future development projects versus what we're running for operations in 2020. In 2020, the company generated a little over 200,000 ounces of gold and did so at an all-in cost of around $1,250. Now, our Magino project that is being built in Canada sits with a large resource base, nearly 5 million ounces already identified and growing today. We will build it in 2 phases. The first phase will be 2 million of that 5 million ounces. It'll take us 17 years to process that material and generate in the first 5 years about 150,000 ounces a year at $700 all-in cost. So substantial improvement in margin, substantial improvement in life of the operation. And now when we look at our Cerro de Gallo, the second project in Guanajuato, Mexico, this will be another open pit heap leach project for us in Mexico. There are roughly about 4.5 million gold equivalent ounce bases to work from here. We'll do it in 2 phases. The first phase, about half of that material, about 1.5 million ounces. It'll take us 15 years to process that and have about a $700 cost and generate about 80,000 ounces per annum. So that's what we're looking to unlock. And that's where the value really comes from. Now remember, underpinning this is the cash flow from the existing operations. So let's look a little further into our Magino project because this project today is under construction. So to give you an insight into how we look at mines and building mines, I want you to think about this. The good cover of umbrella here is that we have permitted this project at 35,000 tons per day. That's right, 35,000 tons per day, a rather large project. And it will be built on a footprint for a 35,000 ton a day operation or 165 million tons of material to be processed. It's like we bought the whole city block and we're going to start in one corner over here with 10,000 ton per day. That 10,000 ton a day operation will yield 150,000 ounces a year at $700 cost. That is clearly transformational for us as a company. And it will represent around 60 million tons of material to go into that tails facility. But because we have such a large resource base to work from, there is a pathway clearly laid out to get to 20,000 tons per day, with 19,000 coming from the open pit and 1,000 coming from an underground operation, if we're fortunate enough. I say, and I submit to you, that the pathway forward is clear. As long as we stay on that yellow brick road and expand and build out this project as deemed and laid out, we can achieve this 20,000 ton a day, which would yield a 300,000 ounce a year producer over a 20-year life. And who wouldn't want that project in their portfolio? So let's look about the pathway to the first 10,000 tons. As I said before, early on in the conversation, that we permitted this project and got this project green-lighted in the fall of last year. We started construction in the first quarter of this year, and I'm happy to report that things are going very well. Mother Nature has actually worked quite well for us and put us on a pathway. We're actually ahead of schedule today with our logging and earthworks, and we find ourselves today turning over the site with our partner, Asenco, to do the building of the facility earlier than expected. Now, this second quarter will bring to us the actual pouring of concrete and starting of steel erection, starting to take place at the site. Our third quarter will bring in actual mining, where we'll start to mine the waste rock that we need to create our tails impoundment. In the fourth quarter, we want to have all the buildings completed and buttoned up so we can then, in turn, put together the various bits and pieces to be ready to do what we call dry commissioning, turning on the facilities in the third quarter of 22, with the fourth quarter doing actual wet commissioning, putting water, etc. into the system, with the first gold pour to come in the first quarter of 2023, bringing it to be Canada's next gold mine. Now, whilst all that's going on and everything is exciting about that, we are drilling deeper underneath the existing resource today, and we'll continue to do so. We'll also develop an expansion study to that 20,000 tons per day and incorporate that underground drilling into it. So if we're fortunate enough to be able to hit that green button in Q1 of 2023 for gold production, we would also like to be hitting that green button for a ramp up to the next phase to 20,000 ton per day. So let's look about what's been done here in the first quarter. As I said, site works are well underway. You can see the clearing from the first photo. You'll see the plant site all graded and ready to be starting construction and actual concrete pouring. The concrete batch plant is now on site. You'll see the equipment on site as we get ready for pre-production mining starting in the third quarter, and our orientation and training of our team members who are going to carry out those works. On the next slides here, you'll see our involvement with the community. We believe that in order to be successful in today's world, you need to incorporate your neighbors into your process. And in the upper corner, you'll see the mayor of Dubreuilville, along with our First Nation partner here, the Missinati Cree, talking through things from an environmental perspective. And you'll see some of the relocation efforts going on from some of these small streams around the area. On the lower slides, you'll see our camp area going in as we prepare for the 400 people coming to this site as we begin construction in earnest here in the June-July timeframe. So moving forward, let's talk about Magino and where it sits and what the potential might be, because this is an exciting time to be in this company. We're looking at what we call the Goudreau Deformation District on this slide. From Renabi on the right-hand side, where Barrick ran in the past, all the way down to Wesdome's Eagle River, we're talking about an area of 125 kilometers. Magino sits right smack dab in the center next to Alamos Gold's Island Gold project. On this belt, 15 million ounces have been found or produced to date, and 5 million of those belong to the Magino project. This project is one of the up-and-coming projects in the area, and this is one of the most exciting belts in all of Canada. So when we think about this area and we think about the Magino mine, we have to look at the two operating mines that surround it. First, Island Gold right next door, where most of their mineralization sits at about 1,000 meters to 1,500 meters in depth. And then Wesdome's Eagle River project about 60 kilometers away, which hosts most of their mineralization at about 1,000 to 1,600 meters in depth. Most of those mineralizations sit at quite a bit of depth, whereas at the Magino project, our 5 million ounces is all contained in 0 to 300 meters of depth, so relatively high in the system. 2 years ago, nearly, our team came to us and said, we'd like to drill deeper underneath the pit for phase 2 to see, is there potential for an underground operation here? And to date, we've completed around 56,000 meters worth of drilling. Now on our next slide, we're going to dive in a little bit closer on the Magino project to the Alamos Island Gold project, which sits adjacent. Now, Mother Nature doesn't understand property boundaries. That's a man-made item. The black line represents such said property boundary. Alamos Gold's Island Gold project sits adjacent to the Magino property. It is pound for pound one of the best projects in all of Canada today. And what we've noticed and what they've seen next door is that as they go further and further down, they find that their grades are increasing along with the depth that they've gone through. And they today have about 1.5 kilometers of strike length from one side on the east all the way to the west side of the project. From the central zone where it says central to the Alamos Island working, you'll see that those underground workings sit about 120 meters from what we call our central and elbow zone. So very, very close to one another. We submit that these are brother and sister type projects. Now our deepest drilling to date is only 950 meters. And we're seeing the same thing happen as we go at depth, that grade does increase. So let's move forward and look at an overview of this project again. Now this is from a plan view. We're looking from the sky looking down. You'll see the property boundary where it says Alamos property boundary. Right adjacent to that, you'll see the elbow and central zone. Nearly 2 years ago, our team came to us and asked for money to drill here. They had success and they came back last summer and asked for more money and to drill to the west. Now, in all my years of being in this business, I've never seen this happen, but our team was fortunate enough to hit on every one of their drill holes a new mineralized zone. That is fantastic. And in the fall of last year, we announced the Scotland 42 Sandy and South zones being discovered by our team. They came to us again in the fall and asked for some more money and to move further west. And they moved out to where you see this hole MA 12-424 and MA 20-057. These are two of the best drill holes drilled on this property. And what I want to point out to you is that now we have identified a strike length of nearly 1.5 kilometers. And we're seeing significant mineralization beneath the pit. So now we're going to go look and try and get a view of what it might look if we go beneath the Earth's surface. You can see identified here on this particular project, on this slide, what we call our open pit. It's in the light brown, and I'll kind of highlight that for you here. This would be the extent of the open pit. Now you can see from this slide, underground, you'll see the central and elbow zone. That's where we have most of the drilling done today. Then you'll move towards your left and you'll see right in the center some drill holes. This area in the center represents what we're calling our 42 South, Central, and Scotland zones. As we move out here further to the left or off to the west, you'll notice some of our best drill holes right in this area. This is what we're calling the South Zone, and it sits 1.5 kilometers away from the central and elbow zone. What we see here in this far south holes that we had drilled, we see significant grade and mineralization. 10 meters at 19 grams, 3 meters at nearly 50 grams, and 7.5 at 30 grams. These are the kind of grades that our Island Gold project next door that we're seeing with our neighbor are finding at 1,000 to 1,500 meters in depth. We're seeing that much shallower at about 450 meters at total depth. Now the distance between the 424 hole and the 057 hole is nearly 275 meters. So a lot of drilling needs to be done there. Our program this year is to spend nearly $11.5 million drilling this out, to put together that resource by the end of the year to help take this project forward and have the potential for an underground. So let's move on to our last project, the Cerro de Gallo project that I'm going to talk about today. This is a project in Guanajuato, Mexico, an area where mining has been occurring for some nearly 200 plus years. This was a project that we think was a smart investment. We picked it up for $13 million, spent a bit of drilling and money on it to date. We are actually in permitting. We have identified a resource of 4.5 million gold equivalent ounces. That's made about 3 million ounces of gold, 80 million ounces of silver, and 187 million pounds of copper. We've broken it into a two-phased approach. The first phase would be roughly half of that mineralization. It would take us 15 years to process that. We think, just like Magino, it would start small and grow over time. But we really like the cost profile here. We like the location, and what we like about it the most is it's right down the pipeline of what our people are doing in Mexico, and we're quite excited about this project. So underpinning all our business is our commitment to sustainability. Last year, we highlighted this through seeing reductions in greenhouse gas our consumption of water, and our air quality improving in and around our projects. We also were recognized in Mexico, again for the 9th consecutive year, as an ESR company, a company that is recognized as socially and environmentally friendly and responsible. That really sets the tone for how we run our businesses. Getting our communities involved in what they want to achieve and what we want to achieve leads to a proper relationship and a proper outcome. Our near-term catalysts over this coming year are going to be about construction at Magino and exploration at each one of our projects as we continue to test new high-grade mineralization at depth at not only the Magino project, but the La Colorada project, and some exciting drilling going on at the recently acquired Florida Canyon and Standard exploration projects. We'll guide towards record production, as I said, that 200 to 250,000 ounces, and record cash flow coming from the operations to underpin and take away the risk of this business. This concludes my presentation for today, and we'll now turn things over to Mark as he's going to conduct a brief question and answer session. Mark?
Peter, thank you so much. And that was a spectacularly deep dive, I would say, with the company, where things have come from and where they're going. Thank you for that. And a lot of exciting news, some wonderful statistics. And I love the yellow brick road metaphor. Thank you for that. We do have a great question that came in right off the top, which is, what is the realistic time frame for 300,000 ounces of annual production at Magino? And exactly what needs to happen for you to make the decision to move in this direction?
Okay. So the first phase is already occurring today. That's the construction of the first 150,000 ounce a year producer with that 10,000 ton a day facility. And as we laid out, that should be in place and ready to kick off production in the first quarter of 2023. We think it's another couple of years beyond that as you get together and pull all the information together to do the expansion phase. Beyond that, to expand to take that next step. So around a 2025 type time frame, you'd be looking at that.
Okay, thank you for that. On the same note, with all this great news, do you see yourself as a takeover target?
I think in any business, when we're talking about a shrinking business, which is what we have seen, and we've seen many companies come and go, that always resides and sits out there. But I believe that you don't run a company looking over your back shoulder. You always have to look to the future. It's kind of why when you get in your car and you take a drive, that big screen in front of you is massive and large.
Right.
And that little rearview mirror, it's there not to focus on where you've been and what's gone on behind you. Yes, you are to take note of what's going on behind you and around you, behind you, but you need to focus on where you're going in the future.
Fair enough. To just touch back on Magino for a moment, when do you expect the maiden resource at Magino?
We already have a resource out today, the 5 million ounce resource and the 2 million ounce in proven and probable. We anticipate pulling together by the end of the year a inferred or an indicated kind of mineralization from this underground that we're tightening up the drilling on here by the end of the year. We should have a mineralized resource pulled together by the fourth quarter of this year.
Okay, thank you for that. There's a lot of interest in Magino, a lot of questions focusing on this topic here, Peter. Are you seeing any cost inflation at Magino and any challenges in finding skilled labor?
Okay, I believe everybody is seeing inflation. Whether you go to the McDonald's or the Tim Hortons, you're going to see inflation. It seems like a cup of coffee or a Happy Meal continues to go up every year, as well as at the gas pump.
Right.
We are, but here's the situation. We recognized in order to be able to build and deliver Canada's next gold mine, we needed to partner up with somebody who had the backing to be able to carry that out. And we've locked in with a group called Ausenco out of Australia. These guys do nothing but build mines throughout the world. That's what they do. That's their bread and butter every day. And their last one they built, which was the Atlantic Gold Project, went fantastically. When we think about building mines, we either overrun on the front end on the dirt work, or we overrun on the back end on this and the ramp up. Their last ramp up, day one, switch went on and it ran. So with this Ausenco agreement we have, it's a fixed bid price contract. So they're locked in. So inflation, yes, it can hit their balance sheet, but not ours.
Mm.
And we did that purposely because there are going to be changes. And we think that partnering up with the right partner makes all the difference in the world.
Mm. Wonderful. It sounds like a very protective measure at the same time as being innovative and exploratory. A little bit about El Castillo, if I can. El Castillo's mine life is short. What are the chances to extend this mine life, and what is the reclamation liability at El Castillo?
Okay. So the joy with the mine when it's coming towards the end of its operations, the cash flow starts to climb off the page, right?
Mm-hmm.
It's some of your best years.
Okay.
So yes, right now, today, we're targeting 2022.
Mm-hmm.
The drills are going to turn this year. We'll see. We can add a bit. We added a bit in last year. Right now, we're probably into the first quarter of 2023 already.
Mm-hmm.
It may get extended a bit longer, but remember, this project has been running since 2007. So
Right.
quite a life that it's already run. And when we think about closure here, this is how closure occurs at an open pit heap leach mine.
Mm-hmm.
So when we cease mining, we'll go through a rinse down process where we recover somewhere around in the neighborhood, we think around 30 to 40,000 ounces
Mm-hmm.
out of this particular project. That'll take 3 years to recover that. Now, what's interesting about that is today the cash costs are around $950 an ounce.
Okay.
When we go into a rinse down mode,
Mm-hmm.
those costs plummet.
Mm-hmm.
We're talking around $400 an ounce. So cash flow rises significantly. 3 years hence, we'll go into a washout mode where we clean up and put the project to bed.
Mm-hmm.
Now, the cost of doing that will take us around 3 years, and it's about $7 million. So you can do the math.
Yeah.
Figure what gold price you want to use.
Right.
We're talking somewhere 20 to 40,000 ounces. It comes out at $400 an ounce. It doesn't take a lot of ounces to pay for that actual reclamation of $7 million.
Understood.
That's the joy in what we see with this project. We're not done yet. We have hoping to add into that life, but we'll see what happens with the drilling this year.
Good to know. I appreciate that. Another question here. Given the impressive widths and grades at La Colorada below the El Criston pit, how long do you think it will take to be able to determine whether the addition of an underground mine is feasible at La Colorada?
Okay, so as I said, we're doing a bit of a dance, right?
Mm-hmm.
Today we have 3 drill rigs running right now.
Okay.
On one side of the pit. They'll pull up here in a week or so and move out while we can get in and do the active mining. This is a project that generated, as I said last year, $25 million worth of cash to the balance sheet. This year is supposed to do substantially more. So we need to keep the spigot running, right? Because that cash flow is needed to protect the company and generate value for building the outside. So our outside date of trying to collect and collaborate all this underground drilling that they're doing, this deeper drilling, is by the end of the year. I want to know, do we have an underground mine coming here? The widths are impressive and the grades are off the charts. So we'll see what comes together.
Okay, fair enough. Thank you for that. Another question here. How do you view the political risk and potential for higher taxes and royalties in the various countries that you operate in?
Okay, well, we just saw that happened here in Nevada. We just had a new royalty applied here in Nevada, in the U.S. It's going to be about a 1%, anywhere from 0.75 to 1.1% here for companies in Nevada. So we just saw that. So to say that there isn't any risk out there in the world, that's not right.
Fair.
Mexico already went through this process in the past, so we're already paying at those higher royalty type rates that they put in place about 4 years ago.
Okay, great. Thank you for that. Another question here coming from another viewer. Honestly, the questions are pretty hot here, Peter, so thank you for joining us today. In terms of, let me just double check I've got the right one coming up here. How worried are you on the amount of shorting on the company and the effect on the stock price, Peter?
That's something that we always watch and see what's happening. Interesting times. We're getting to what we call a rebalancing situation coming up here in June, in a week from now, right? It's the end of this week. So we're about ready to be added into a new indice possibly, which is going to push a whole bunch more shares. So if people are shorting today, it's not going to be a great situation for them. because there's going to have to be a take up of additional shares. We believe that we've grown to the size we're $1 billion market capitalization today and have the trading liquidity and volume that it looks like we're going to be added to a new indice, and that's going to push a bunch more shares. So yeah, you do watch what's happening, but not too concerned about it.
Fair enough. Thank you for that. Another question here, Peter. In what quarter do you expect Florida Canyon to perform in line with the updated mine plan that was filed last year?
Right. So Florida Canyon, we have been waiting on permits. COVID obviously slowed a lot of things down. We finally received that permit here just last month, beginning of last month. So we've actually started to undertake this process of putting in this overland conveying and stacking system. So that's underway right now. We expect that to be in place here in the second half of the year. Really, we would expect to see the full benefit, because when we embark upon stacking mineralization, we usually don't receive the rewards from that stacking and mineralization until the following quarter. Okay. So really fourth quarter is when we're going to start to see the impact of these changes.
Okay. Good to know that. Thank you, Rob. We have a question here from Mark saying, can you please go over the timeline to Magino once again?
Okay. So here's what we're looking at, Mark. It's a 24-month build. We're into month 5. I liken this for a lot of people. Hey, we've just brought the baby home from the hospital and they're sleeping through the night. We haven't gone through the terrible 2s or 3s or those teenage years yet. Mm-hmm. And hopefully we don't have to. I mean, so far, everything is cooperating and working very well. COVID has not been an issue in finding the people and getting the people trained. This is an area that openly and admittedly really wanted this mine, and our biggest supporters are local communities and First Nation partners around us. Mm. And so this has been a good program for us. It's a 2-year, as I said, 24-month. Mm-hmm. Right now, we just finished the clearing and ground prep. We're going to start embarking upon the concrete and steel erection here to get that all buttoned up for the winter. Mm-hmm. And then by the third quarter next year, we're going to do what we call dry commissioning, turning on all the motors. And then in the fourth quarter, the wet commissioning, with gold to be poured in the first quarter of 2023.
Understood. Thank you for that. I'd love to turn focus again here, Peter, to the Canadian operation, this new venture. And we talked about Florida and permits. I'm curious, being on this side of the border, just how has it been working with the process in Canada, Ontario, the permits? Where would you say that game is right now?
Well, I would say that it's not as short as working in Mexico. We can sometimes get permits quicker there. Mm-hmm. I think it's a more fulsome process. But here's what I will tell you. Our experience over the last year with working with the Ontario government, Mr. Rickard's group, and with the dam safeties and the First Nations and everybody that we've had to consult or work with mm-hmm. towards getting these permits, tremendous support.
Great to hear.
And that's been great. And I can't ask for anything better than we've had over this last year and a half to 2 years of experience.
That's great, Peter. Thank you. Good to hear that. It's a lot of positive energy. And I'm curious, as we wind down, is there anything else that we haven't touched on or comes to mind to share with our audience today?
No, I think what I would tell the audience today is this is an exciting time to be an Argonaut. I mean, we have exploration results that are just crazy good right now. And we're continuing to find and see where those lead us in the future. We have this development program undergoing right now. And anytime you're building a new mine or building a new house, every day is a change, and it's exciting to see that those first steps being taken and things come together. And it's quite interesting to see that coming. That coupled with so far we've had a fantastic start to the year from the operating front, and that's rather exciting to be. That couple that with where we are as a universe, thinking about the gold market as a whole, mm-hmm. This is a place that I think investors want to be today. It gives a safe haven. It provides that foundation behind a spending spree that's going on throughout the world.
Sure.
For protection, but also an area that's going to, I believe, take off. Because as we develop technologically further into the future, gold is going to be something that is going to become critical because electricity is going to be our number one need.
Mm.
And it's the number one platform for transmitting that we know today in the world. So I think this is a great place to be. I think there's a fantastic momentum behind the sector, and it's one that's starting to gain traction and is not hit the limit yet.
That's great to hear. I have to say, Peter, one of the most in-depth presentations. I appreciate all the effort and the time and your openness with the questions. So we'll leave it at that. I want to thank you for joining us today. We look forward to watching where the company goes. And to everybody joining us today, I once again encourage to fill out a survey, a questionnaire, so we can do a better job moving forward. And I know that we'll have more opportunities to meet with you, Pete, as things go ahead.